I'm Sam Tenenbaum, head of multifamily insights for Cushman and Wakefield. Well, I think the multifamily market right now as a whole is at a really interesting crossroads. For the past year and a half or so, I'd say we'd seen some of the strongest demand we've seen since the pandemic, and even going well back before then, it's some of the best demand we've seen. And that presents some really interesting opportunities for the market right now. Everybody is so used to hearing about the Sun Belt, and it's not to say that the Sun Belt is overplayed or not a good place to invest, but I think there's a really interesting and compelling opportunity in the Midwest of the US from a multifamily standpoint that is maybe going underappreciated by investors. From a cap rate perspective, it's got pretty high cap rates relative to every other region. It's got minimal new supply. Of all the regions, it's got less than 3% of its inventory under construction, which is really compelling. When you look at where the 10 to 24-year-olds are, there's some really compelling markets in the Midwest that actually rank higher than you probably think, right? So a market like Chicago and Indianapolis have, maybe not top 10, not top 5, but top 15, top 20 levels of where that concentration is today. Everyone thinks about these cities as pure out-migration, people are leaving, when in reality, yes, there is out-migration, but it's not nearly to the degree that it affects multifamily fundamentals. We're still seeing strong household formation in those markets. They're still eminently affordable. When you think about the relative delta of the Midwest compared to the overall average of the US or compared to the Northeast or the Sun Belt or the West Coast, it's by far the cheapest region. From a climate change standpoint, the Midwest is also really interesting because it's got abundant freshwater resources in a way that most of the rest of the country doesn't have. Yes, it's got an older industrial base, but if you think about where the natural disasters happen in this country, it's generally along those smile states. But the relative scale and scope of those disasters, not nearly the same as what some of these other, for lack of a better term, sexier markets are sometimes face from a devastation standpoint. From a forward-looking standpoint, right? We can look in the rearview mirror and say rent growth has been really strong in the Midwest, and the worst market for rent growth over the last year is still above the national average. But if we look forward, it's really going to be about supply, and that supply is already low. Like I said, less than 3% of its inventory is under construction today. So with that supply falling off, you still have pretty good demographics. You have more affordability there than any other place in the country. That, to me, shapes up pretty well with the fact that the yields are higher than anywhere else in the country as well. And so you're getting compensated for good growth, decent demand, and no supply, and that's going to keep fundamentals pretty healthy over the next few years. When thinking about where to place capital in the multifamily universe today, I think the Midwest is really compelling, and it's compelling for a lot of reasons.